So Joe and I were connected late in 2017. We got introduced by a mutual friend when we were just starting to explore how could we leverage blockchain technology for the Atari movie and using tokenization as part of the financing strategy for that. And Joe and I immediately hit it off and had a great rapport, great chemistry. And we just happened to be there when everything started to go down with not just them, but everyone in the industry basically getting subpoenas from the SEC or notices they were under investigation. To me, it was like there was obviously something going on. There was some sort of coordinated effort. And I felt like there was a story that was worth telling. And I felt also like there was a story that was not being told about the whole, world of cryptocurrency and the entrepreneurs behind it. And I felt like there was a misconception where everyone was looking at Bitcoin and crypto like it was only something that was used by criminals, people on the fringe, and people who lacked credibility. And what I was seeing was something very different on the front lines. I was seeing people like Joe, who were people with amazing credentials, amazing experience. Joe worked for the government as a software architect. He's worked at Disney. He's worked at a number of other companies, including Coinbase, Overstock, a bunch of companies. And Joe is a really accomplished software architect, and his vision for what he was looking to do with the technology was really interesting. But even more interesting to me as a filmmaker was him being the face of a different side of crypto that people just didn't imagine. Like most people imagine Eastern European hackers in the dark web, sending Bitcoin for drugs or whatever. And the reality is, in what I've learned in my travels through the world of crypto, is that there's people of all walks of life are in this movement to build a better, more decentralized world. That's white, Black, Hispanic, men, women, and there's more and more women coming into the space. I think that's a trend that's been shifting over the last 2 years, at least what I've been seeing in the space is it seems like more women starting to come in. I felt like Joe's story is unique that, here's a guy from middle America, Dodge City, Kansas, seasoned entrepreneur and software architect that, again, has worked for huge corporations and the U.S. government. And here he's still getting messed with by regulators in the U.S. And again, I know the regulators are doing their part and they think they're doing what's right, for the most part, but that doesn't change the outcome. That doesn't change the effect of their actions. The effect of their actions is what they effectively did is they slowed down innovation in the United States. And they've allowed other countries like China and others to basically leap ahead in the race to define who is going to dominate the blockchain for the next 50 and 100 years. And for those of us, I think, who are aware in the movement, we understand the implications of that. The implications of it are, profound for the future of humanity, because the next version of the internet will be built with value programmed into it, with money programmed into it. So, and it's not to say that one system will dominate completely over the whole planet, but it certainly is a very critical moment to establish what systems are going to power the future, money systems of humanity, and what are the values that are imbued into those systems. And so when I looked at Joe, to me, that was a big part of it, is just putting a different face on crypto, a human face on the story behind cryptocurrency. And I felt like Joe, as a family man, as a former government worker, was a perfect story to bring people as a through line to come into the world and see that there are people behind these companies, behind these various cryptocurrencies. There are real entrepreneurs, most of them with very good intentions. They're working hard to build technology that they feel is going to be beneficial to humanity and to the world. And that is the story that we're getting out with open source money. And Joe and Dragonchain are the perfect company to be that through line story that takes us through that.
All right, everyone. Welcome to Super Happy Dragon Lucky episode 2D, 0x2D. So today we have a couple of things to go over before we bring on some guests. But the first up is merch. So we have the merch site back up, and we're getting a lot of things added. So bear with us while we get more items. We have a few designs that are on hold. We're trying to get back in the store, most notably Dragon or Die, right? I think everybody wants that. So, and we're trying to get more items, more stuff in there, especially with open source money coming. We'll have some stuff themed around that. Some really interesting pieces and designs around Liberty and everything else. And then also Super Happy Dragon Lucky stuff too. So it'll be cool. It'll be fun, mostly fun stuff. We'll probably have some giveaways and everything to demo the contest system. See, even the banana sticker, we didn't have that before. Then tied to that is something that's coming in August. which if anybody remembers last year, at least, I don't know how many years it's been going on, but there's a thing that people basically, artists draw dragons in August. They call it Smogust, and we're going to basically sponsor a small contest with some small prizes, but also to highlight that we're going to have the ability for artists to submit designs, and for the Smogust contest, whoever wins, and I don't know if we're doing weekly or a single winner, that design will be in the store, in the merch store, and the artist will get a cut of it. So that'd be cool. We're going to do that also for other art. So if you have ideas for JoJo or Dragon related designs, we are going to have a program where an artist can basically get the proceeds from the purchase of their designs. So it'll be pretty cool. So next up is something everybody was watching. Beaxy held a Provably Fair contest, and it's only 1 week has passed, and we're still, by the way, getting the interfaces for the front end fully integrated, because they have a custom contest page. But one way or another, the first winner was selected. It was selected based upon Bitcoin and Ethereum blocks, so that it is provable, at least with measured proof, that we nor Beaxy could control who won it, which is a really neat concept, and in my opinion, a really simple, understandable, and very powerful use case for blockchain technology itself. And given our interchains with all of these public blockchains, it's particularly valuable to show what we can do with that. So that product is rolling out. Beaxy is signed on to use that product for all of their contests, including when they have trading contests in the future, and everything else. That it's a really good way to show that it's completely fair. Everybody has the same chance of winning, based upon the predefined rules and everything else. So really cool stuff. So go check that out. There are still 3 more weeks of the contest, and the last week is 89,000 dragons, more than 89,000 dragons. So should be fun, should be cool. Go check that out. So that was everything we have to at least go over. There's going to be a lot of stuff coming in the next 2 or 3 weeks on the show. So we'll try to give a little bit of a notice on what we're going to be showing, so that what's going on, especially prior to the release of the show, and the things that we're rolling out in advance of that. So anyway, stay tuned for that. So our first guest has been an active trader for over 3 years in crypto, has a software engineering background, and most importantly, participated in the Dragonchain token sale. So welcome, Ethereum Jack, to the show. Or is
Thank
it
you, Jack.
Is it Bitcoin Jack or Ethereum Jack?
It's technically Bitcoin Jack, I'd say, but I do every once in a while change my name to Ethereum Jack when I really think, as a major in this space, it's gonna outpace Bitcoin in the near term. So I kind of like to play with the audience a little bit that way. Last time I did it, we had like 100% run on it. So it is fun to kind of like signal it in that way.
Is it intended to be leading indicator or lagging?
It varies. Like it depends. It really depends. But oftentimes, the way I see it, when Ethereum is outpacing Bitcoin, whilst Bitcoin is also going up, I would definitely say it's a leading indicator of overall strength in the market. So yeah,
right on. That's true. It's hopefully it feels like it should, right?
Mm-hmm.
Okay, so about technical analysis. So what's your favorite and least favorite method of what is known? Because you have a lot. Your library is a lot broader than mine. I understand a few things, right? NTA. So
I mean, I trade a very broad range of concepts that are all kind of weirdly mixed together. But my very basis that I started off with back in, let's say, 2017 was learning about price action, which involves mostly just looking at horizontal levels where you kind of like think supply and demand will be sitting, where liquidity is sitting or could be generated because people have their stop losses, et cetera, et cetera. And by trading these ranges and breakouts, you kind of like speculate on the trend. So that's kind of like a very vertical way to look at your risk management, to define how much downside there is until you're in validation to get an entry, and then to define where you want to where you think price is going to go. So it's at the very foundation of my trading, because it's the only way to really have a risk defined trade, which is probably the most important thing when you're trading.
Okay, that makes sense. And then something else that, and you know, when I've tried to trade way back, I gave up. What do you say for scope? Because, and this is a little hard maybe for me to describe, because as an engineer, I used to do some audio file coding stuff, right? And whenever I was interfacing with a different device, it was hard to find the right scope. I would think, oh, this is just bad data. And then when I realized, oh, I'm just not zoomed in enough, right? So I'm wondering, and I when I was trading, I felt the same way. I couldn't find a way to, like say when you're switching from weekly to daily, that that's too much of a, it's like I lose where I am. I can't just zoom in on a weekly and see the daily, or zoom in on a daily and see the hourly. Does that make sense?
Yeah, I kind of understand what you're saying. You're basically talking about like at what picture you're looking at, and in which context you're taking your trade. And
Yeah.
I mean, I'll often so my base layer is that I always want to have exposure to the market to catch like the larger trends that may take weeks or even months or years to finish. At that point, the most important time frame for me to look at is going to be the weekly time frame. I want to have a decent idea that there is a giant chunk of demand sitting somewhere, and that we have a structure like Elliott and Wyckoff and off-chain and on-chain analysis, some psychology that all mixes together with price action trading to create this idea that on a weekly time frame, I expect, for example, demand at 3 to 4K or resistance, so supply at, I don't know, 10K or 14K. And at that point, it becomes the challenge to find an entry. And what I usually try to do is then I start to like zoom in further until I find a setup in a location within that weekly structure that I'm satisfied with, which I can enter with a very good risk to reward ratio. At that point, I allow myself to get exposure, and I start off small. You know, I don't go all in on that position straight away. So just to take a recent example where I took like a really high time frame trade, which was back in March when price dumped to the 4K regions. At that point, I wanted to get some exposure, but I just took like 20% of my intended exposure. And then as I got my more confirmation, I would be waiting on a lower time frame, other setup, a pattern combined with some Elliott wave theory, for example, to create another risk-defined entry to add to this position. So I keep building as we go. And then at a certain point, I do have my position, and then I want to let it ride. And at that point, it becomes really boring because I'm like, okay, I'm taking this entry on a weekly basis. This could be a rally that I'm going to be mostly exposed to for the next 2 years for like, let's say 60 to 70% of that position. So then it becomes boring if you want it to become boring. But you can then still look at how the trend develops, there's always going to be fractals and fractals and fractals. It's literally like looking at a seashell, which like kind of grows itself in a way, and it doesn't necessarily give you any prediction on how the trend will continue or where it will go to, but you will keep getting new opportunities where when your bias is still that you want to be long and buy some more, where you just take some extra exposure inside a range, again on the 1 hour basically to find the entry, and then trade it towards the range high, just to simply play that extra exposure on top of the baseline exposure for the bigger cycle trend, for example.
Wow. Okay, that's great. Okay,
that's a long.
Right. It's like there's a lot of that went over, but it's okay. That's awesome. No, because I wonder about this, especially the fractals and the Fibonacci lines and stuff too. I'm really interested in that, but I've never had time to really study it. So, okay, so we have a couple of charts set up that we were going to see if you could, because some of this is like art. So, so when you're looking at, so can you explain these charts, like say at least at a high level? You don't have to go to radical.
I mean, this is based off Gann theory, and Gann theory in the baseline kind of argues that collective behavior is as much as a natural process as a tree growing and you have the rings, or a seashell that's growing and it expands with certain geometric rules, and which once you start to do the math, you can all trace it back to the golden ratio. And when we look at this chart, the theory here was that if you can only draw this chart once we had the bottom at around 3K, and the bottom, the base theory here is that we were going to divide the space up in 9 triangles, because a lot of processes happen in steps of 9 in nature. And once we have the 3K bottom, we can connect the 3K bottom with the 20K top and create a 45-degree angle on it, which kind of like squares our chart. It makes a fixed ratio. So if you zoom in and out, it's always going to be the same ratio for that chart. And after that, what you then do is you take the first big impulse down after the parabolic run. So that was from 20K to 6K. And we start building triangles, like how is that called in English? Like when you have a triangle with like all 3 equal angles.
Equilateral?
Yeah.
Okay.
And then once you have the first triangle, which is depicted by the number 1, you can pretty much generate all the others by just generating the next triangle, and you get these hexagons. And hexagons and triangles, you're going to find them in nature too. And of these lines, we then get like these kind of like blue dotted lines that go through it. And the theory then becomes that based on that simple first line, we can generate the geometry outwards. And then the blue lines become like pivotal moments in price action, very important moments in price action. And the theory behind it here, which kind of says that we need to complete the 9 triangles to complete this entire kind of like rhythm. And then once that rhythm is done, we can enter a new rhythm, which is, I assume, the next bull run.
Wow. Okay, that's awesome. Okay, next one. Because these are awesome. Because I saw this one. In fact, I gave this to Blake. I'm like, I want to know how to explain this one, right?
Yeah. So this one is very heavily based on the geometry of the golden ratio again, but differently. Gann says there is. I'm not sure if I'm gonna have if I have time to tell the entire story, but the bottom line is that. Like I said earlier, every natural process seems to behave by extending itself with the number 1 0.618, which is phi, which is the golden ratio. And these growth cycles then become fractal, and they then can go into infinity. And what you'll often see is that you can divide up space, both in time and price, in this ratio. So, for example, if I take 0.382 and I add 0.618 to it, you get 1. But if I multiply 0.382 by 1.618 enough times, I get to 1 too, right? And I get to 1.618. And the theory here is that, again, we either go over, we have to build up our patterns in these portions of the golden ratio, both on the price axis and on the time axis. So what you see here is we took the pivot on the left side, where price kind of like started breaking down from, I can't see where that is, but like 10.5, and the entire little rectangle at the left bottom, that is the 0.382 in time and in price. So the right side and the left side get extended. And then there is this, well, I don't know, this is going to be a lot of explaining, but
that makes sense, though. Okay. Yeah.
We end up with these levels that are all going to have some impact and interaction with price, and then it becomes important to know which ones are going to be most important at what time, and that is mostly astronomy related. So we're going to have to find speeds, kind of sounds silly, but we're going to find speeds of planets to match these lines, and then look if they are currently occurring at those speeds. And then once we start building this little narrative and we find confirmation on that, we kind of start trusting these lines more. Wow. And use them in combination with Elliott wave theory, price action, to create risk-defined trades.
Okay, so because that makes sense to me. The symmetry is because you're talking time and price, both with the phi and Fibonacci and everything else, right? Mm-hmm. That's awesome. That makes sense, because I was like, how? Anyway, that makes sense. And we love Fibonacci at Dragonchain, right? The token supply is the 43rd Fibonacci, 433, 494, 437. And if you look in the upper right of the screen there, you see the Dragon family crest, and that's the shield itself is golden ratio, rectangle.
I see that. Yeah. It starts with a little circle, then goes up, then goes to the left, and
yep. Yeah. And it's and the bottom of it is a Fibonacci spiral of scales. I can't remember what that's taken from. And anyway, the whole thing, everything is Fibonacci based. In Den, the voting is all Fibonacci based. So anyway, that's awesome.
That's cool. Yeah. Makes sense.
Okay. So fourth touch. Never trust the fourth touch. Can you explain that?
It's a very simple statistic. I generally like it the most on horizontal levels, but you can try and use it on diagonal lines too. But basically, if you study resistances and a test of a resistance or a support, and you kind of cluster together multiple touches depending on how far you zoom in or out. But if you have a big resistance, for example, and it's been attacked and tried to break, and it's been trying to break it once, it's probably going to be strong because it's the first test of it. The second time, it's probably still strong enough, but there's less supply. If you imagine a curve with time and supply, every time you test the level with supply, it's probably going to be less, unless someone resupplies the level with supply. But at some point, especially considering Bitcoin as an asset is has a fixed supply and issuance, there's not going to be enough there anymore to break it. So with every touch, it becomes weaker. This specific resistance, and a fourth touch just generally has this tendency between 70 to 80%, depending on time frames you're looking at, et cetera, just to fail. So like the first time you visit it for the fourth time, it might actually see a little bit of a rejection. But in general, if it just stays up there, it's probably gonna break it. Sometimes it doesn't, and then my rule doesn't fly. But it generally does.
Okay, good deal. All right, so the last part of the interview here. We're going to start something new, and these are rapid fire. So the typical thing you would think, the first thing that comes to mind doesn't have to be long, but if you want to go into any depth, you can too. So
sure.
It's up to you. All right. So some of these, and these are not mostly going to be, per person. These will probably be pretty much the set of questions that we ask. All right. So are you ready? We'll start this real quick.
So you're just going to ask a question, and I just need to answer as quick as possible. Just that pops in my head.
Yeah, it'll be a word. It'll just be a single word or a person or something like this.
Cool.
Okay. Okay. So, Biden.
Sorry.
Biden.
He's dementia.
Okay. All right. Donald Trump.
Monster.
Okay. All right. China.
Bitcoin.
Okay. NSA.
Bad guys.
Okay. CIA.
I don't know.
Okay. Snowden.
Legend.
Okay. Ross Ulbricht.
I think he's a legend too.
Okay. Assange.
Legend.
Okay. Seth Rich.
I'm not sure who that is.
Okay. All right. Good. QAnon.
Sorry?
QAnon.
Unsure.
Okay. All right. That was it. So that was it. That was great. That was the first time we've done that. So thank you very much. We have a couple of reasons that might be fun later for some people too. So
okay. No, definitely.
So now we're going to bring so you're going to stay on, and we're going to bring on our next guest. And he spent 5 years at Grubhub, helped to take them public. He's a co-founder at Stacked. He's out of Chicago, and he worked with Bitcoin Jack for quite a while, I do believe. Welcome, Bitcoin Birch, to Super Happy Dragon Lucky. Hello.
Hey guys.
Birch.
What's up, my guy?
How are you?
Long time since I've seen that green bee. Looking good out there, my guy.
You too, man. See, you're wearing the Stacked shirt.
You know I represent every day.
I know, man.
Man, for those, just to point out, reiterate what Joe said. They didn't know when they booked us together, but Jack is, in case anyone cares about my opinion, which shouldn't be many of you, my favorite trader in the industry. Came up together, traveled together, worked together for almost 2 years. So if anyone's watching this, and even if what he just talked about is a little bit higher in terms of the theoreticals, this dude is, I can vouch for him personally, one of the most solid guys out there. So I'm glad to be chatting with you, my guy.
Cool. Yeah, I appreciate that a lot. I mean, we had a great time working together. I learned a lot. Like Joel was pretty much like my crypto family when I started out in crypto.
That's right.
Things started to move really fast from there.
Right.
So, yeah.
And that was at is that Bitcoin Bravado? Is that what that was?
It was Bravado Trades. Yeah, that was one of our educational community. Yeah.
Okay. Yeah, because the first time I ever talked to Jack was about our the Dragonchain Academy and that whole platform, when I think he might have still been working with you guys. So
absolutely,
that was a while ago.
He ran the show. He was the man.
That is awesome. Okay, great. And were you not physically all in Chicago, were you?
Nope.
Okay. All right. I thought.
Jack's a bit of a nomad, right? He's been kind of all over the place since I've known him.
Mm-hmm. Yeah.
Right on. Okay, well, that's great. And is Bravado still going?
No.
Okay, I didn't. All right. And I didn't even know you were in Chicago until I was in Chicago with some on different business, and somebody, oh yeah, they're here, right? I was like, yeah. Oh, I had no idea. So That's great. Okay. Tell us about Stacked.
Well, yeah, I'll definitely take the opportunity to share kind of what we're working on. But all the things that Jack just talked about are an example of why I have personally no interest in trying to trade. I just don't have the interest in trying to learn how to do it. And I know I'm trading against guys like Jack, so I'm going to lose most of the time. So for all the rest of you who don't actually feel the passion to dive into that particular craft, and that's what it is, guys. Trading is, and when I've learned this, and I've learned this sitting right beside some of the better traders in our industry. It's a craft, right? It's a true profession, and very few people find a way to be long-term successful because, like any craft, it takes putting in a ton of time and energy and taking it very, very seriously. You can be a decent trader if you put in a decent amount of time, but to be a great trader is going to take real commitment and education and time and money. So because I personally believe trading kind of sucks and it's not a lot of fun for me, but I want to have a lot of exposure to this particular investment ecosystem that is cryptocurrency, digital assets, the same way I'd like to have some exposure to real estate or the stock market or metals. I wanted to come up with a solution that allowed people like me to get easy exposure to this space, in a non-custodial way. So hold their cryptocurrency wherever they're comfortable holding it, but tap into some automated tools, much like you would see in the traditional equities market, to allow you to, follow a strategy from someone like Jack, or take a more conservative long-term approach by buying an index, a basket of coins that have been put together by experts, be it Bitwise or Anthony Pompliano's digital asset fund or Coinbase's index, or whatever the case may be. Just make it super easy to put your crypto on auto drive. And that's what Stacked is. It's an automation platform that allows you just to connect to your exchange and then instantly tap into a pre-built future strategy that takes long and short positions from a marketplace, or or invest in like a pre-built portfolio or an index.
That's awesome. And is it like, what's the entry level? Like, is it something for just huge investors, or is it something that anybody can come in?
Yeah, it's a great question. So it varies, just like any level of investment would vary if you were a Robinhood trader. You may be super novice with just a couple of bucks in crypto, and you want to hodl that crypto, but you're just not sure of the best way to structure a portfolio long term. And for you, it's probably best that you buy an index, with your available crypto. You can make some customizations to that index if you want. So if you want less of a coin or more of a coin, you can customize it. Set it up to rebalance, every month or every quarter or every week. So that way, that as the prices fluctuate of your crypto, your portfolio is always staying in that range that you want it by rebalancing. Set it and forget it. It's a free product that we offer. It doesn't cost you anything monthly. You just
and it's incredibly powerful rebalancing. Like, just a rebalancing strategy on its own is,
it can be. So what we provide is a built-in back testing tool that allows you to kind of customize your index, so to speak, and then back test it. Now, back testing is back testing. Okay, it's not guaranteed. It's just it's not saying this is going to continue to happen. But what it does is it gives a novice, someone like myself, who doesn't have the understanding of some of these technologies, like maybe the way Jack does, the ability to say, all right, well, if this was my portfolio over the last 2 years, and then which rebalancing period would have been the most profitable historically? In some cases, rebalancing is not the most historically profitable, but in most cases, either weekly, monthly, or quarterly rebalancing will edge out the other time frames by a little bit for whatever reason. And that can give you the insight to say, okay, well, based on this structure, I'm going to go ahead and set up monthly rebalancing, and I'm just going to let it ride.
Wow.
Now, if you're a little bit more into the scene, if you're maybe dabble in trading a little bit, if you have an account on, Bybit, BitMEX, FTX, you like to take some occasional long and short positions, then we have a marketplace of strategies from traders, many of which you guys have heard of here on Twitter, where they make a strategy available. We're just kind of the UI. We just make it easy to use, but they make the strategy available. They set the price of that strategy. And so maybe it's $100 a month. You connect it to your account and you let that strategy take leveraged, more aggressive trades for you. And over a long period of time, most of the strategies that we've listed on our marketplace to date have been really profitable. And so that's been good to see.
Wow, that's awesome. I'm gonna have to check that out. Is it
Yeah,
available in Washington State?
well, yeah, because ultimately we're not custodial, right? So if
Nice.
so you're just connecting to your exchange. So if you have an account on XYZ exchange, that's between you and that exchange. It's not up to us to decide whether you're supposed to have an account there or whatever the case may be, because there's a lot of gray areas. So as long as we support the exchange that you use, then you can use Stacked. And we're going to be doing a lot more in the near future, fiat onboarding, earning interest, things like that are going to be really cool.
Okay, great. Is there any notion of fundamentals and how token economics are obvious, but fundamentals, that's a lot. We notice a lot of, especially crypto Twitter, but even some of the coin market cap. I mean, they have everything about the token economics, right? That they can, but they don't have anywhere at all to compare fundamentals. What is this token at all?
Yeah. So, I mean, as a part of building out a good UI over the long term, sharing as much information about different cryptos that we can pull in from the internet will be important. But ultimately, the idea here is that today, in order to buy crypto, most of us are investors. Most people watching right now are not traders. Some of you might think you're traders, and you may come soon to learn that you're not. Most of us just know that we want exposure to some of these great ideas, startups, projects. Like let's say we know we want to invest in Dragonchain because we believe that Dragonchain has a big future. Like, we believe that there's an opportunity. However, in order for my 21-year-old sister or my 27-year-old girlfriend or my buddy who works at the bank here in Chicago, in order for them to get any access to crypto, they have to understand what an order book is, what a market or a limit order is. Do they need a stop loss? It's completely broken. So while those platforms and ecosystems are great for traders, for the rest of us who are just living in the normal world, and we just want some exposure, we just want to be invested, we need an easier way to access that crypto, manage that crypto. Coinbase has done a phenomenal job with some of their onboarding, but it kind of stops there. So again, what we're looking to do is take experts like Jack as an example, or whomever from the industry, whether they be traders or investors, take their ideas and their concepts and their strategies, make them available at one click to other people, and let you kind of have an easier way to invest. It really comes down to not requiring the user to have to put too much thought into it, and just give you some of that exposure and some of those tools that you would come to expect in 2020. Dollar cost averaging strategies, rebalancing, tax loss harvesting, just basic stuff, and automate it for you.
Nice. Okay, great. All right. So let's see here. Are you ready for rapid fire questions also?
Yes, let's do it.
Okay. All right. Ready? Joe Biden.
Dementia, for sure.
Okay. All right. Donald Trump.
Polarizing.
Very, very true. China.
Bitmain. That's really the first.
Okay. NSA.
Suspicious.
Yes. Okay. CIA.
Questionable. Very questionable as well.
Okay. Snowden.
Well, I don't want to use legend. I would say trailblazer.
Okay. Very good. Ross Ulbricht.
OG.
Okay.
R.I.P.
Assange.
Ballsy.
Okay, very true. Seth Rich.
Conspiracy.
Okay, and QAnon.
Unfamiliar.
Okay, all right.
I'm unfamiliar,
Sounds
but also
good, right?
anonymous. Unfamiliar.
Yes. Okay, so for both of you, we had questions about, and you can tell me you don't want to do price target stuff, right? But it's just interesting. First,
I'll share my opinion. It's not worth anything.
So are we expecting bull run by end of this year or next year? And what is Bitcoin and Ethereum, price targets for end of year?
Jack, you want to kick it off? I'd love to hear your opinion so I can sound less dumb when I give my opinion.
I mean, it all depends on what you just called scope earlier, Joe. But I do think that between now and end of year, price is going to be up. I think Bitcoin is going to be close or around 20K by the end of the year. And for Ethereum, we might actually see a little bit more appreciation. So I would say that Ethereum definitely has the chance to maybe even see upwards of 500 this year, if we're lucky.
Okay. Joel?
So price targets, yeah, whatever Jack said. No, I'm just kidding. Well, actually, I'm not. I mean, it's not terribly out of line with what I think. Here's the simple answer that I tell people. Especially in the real world. Again, I'm not necessarily in this world of day trading all the time. I'm in the real world, a lot of product and startup guys and tech savvy guys who, again, want to be invested in the space. Do you think Bitcoin's going to go up? That's the question I get. That's kind of what you're asking as well. Obviously, I wouldn't keep holding this stupid thing if I thought it was going to go down. So over the period of time, I believe the price is going to increase. I believe that we're going to reclaim $20,000. I believe it's reasonable to suspect that that happens this year. I also believe that $3,000 Bitcoin is far from impossible. Black swan events happen more often in this industry, in this ecosystem, than others. I believe the stock market is standing on toothpicks right now and is more correlated than people think, crypto being more correlated than people think. So if the equities markets plunge, I believe that we have the opportunity for more downside for crypto. So I believe that if you're going to invest into Bitcoin in particular, you should be prepared to see 50% drawdown, because we've seen that 27 times in the past. And I believe that if you're patient with it, it will prove to be a good investment for you. And if we're talking about price targets, then we're not talking about the miner network or proof of work or anything like that. So I think it'll be a good long-term investment. Ethereum, I have a soft spot for. My buddy Crypto Cactus, shout out, he's in the comments right now. He's a big fan of Ethereum. Ethereum was my first real foray. I started with Bitcoin, but bought Ethereum at sub $10, and that was the first opportunity that I had to see some of the impact of price volatility to the upside. The price that I have in mind for Ethereum as a target I'd love to see, that tells me all is going to be right with the world, is $1,000. I think that if Bitcoin's at 20, I think Ethereum's at 1. And so in that same time frame, I wouldn't be surprised to see Ethereum hit $1,000. I think there's less downside volatility to be expected with Ethereum. I think it's already had most of that. So I think while Bitcoin may see potentially up to 50% drawdown if you bought it right now, that's something that you should have in the back of your mind. I think Ethereum may only have 20% drawdown, and so maybe a little bit more conservative investment, but also I think potentially has less long-term upside. But I know that a lot of guys out there will disagree. See Ethereum at 7, 8, 9, 10 grand.
Yeah.
So we will see.
That's good. And by the way, that's why I think there needs to be more fundamentals analyzed, because it's how do I say this? The price movement and everything else is based a lot on natural things, because it's humans coming together, and then you might have events that affect that, but a lot of it's just going to be stuff that happens with this massive data. And yet the fundamentals, I think if you look at the fundamentals of Bitcoin alone, let alone Bitcoin and Ethereum and the whole ecosystem, it has to be massively undervalued, because we already know, we're adding a feature to Eternal where it will show, and we're waiting on a couple of extra data points before we can roll it out, but it'll show the amount of the actual value of energy applied to how we're securing your transaction on Dragonchain, and it's radically high for very short periods of time. So, and most people don't understand that, because they look at hash power, and hash power is it's like the national debt. You can't really understand the magnitude because it's too big of a number. And so I don't know, we're trying to tie that in so at least people can tie it to something they understand, in actual dollar value. So
I think it's important to differentiate, for me and probably for the audience. You mentioned fundamentals. That's how I would evaluate a traditional startup, right? If I'm an investor, I'd evaluate stacked on certain fundamentals: traction, revenue, use case, etc. If I'm evaluating Dragonchain as an investor, I'm thinking about the same things. What does this company have the opportunity? How is this company going to make an impact, which will drive value back to the network? With coins like Bitcoin and Ethereum and other cryptocurrencies, we shouldn't be calling most of these tokens. There's 2,500 listed on CoinMarketCap or whatever. Last time I checked, maybe there's more. We shouldn't be calling 98% of them cryptocurrencies because they're not currencies. Right. What they are is they're digital. It's digital stock that isn't tied to equity. That's what it is. The success of those coins from an investment standpoint will be directly correlated to people's perceived, understanding of what the success of that company might be. So if they think that company is going to be successful, or have be publicized somewhere, or listed on Coinbase or whatever, they're going to buy it because they think the price is going to go up. When you look at traditional like Forex or what have you, you see people trading Venezuelan dollars versus Canadian dollars versus Great Britain pounds. It's just trading. It's just it's greater fool theory. That's all it is. It's just, can I get someone to pay more for something that I paid less for, over and over and over again? And guys, there's nothing wrong with that. If the majority of crypto's volume, which it is today, is tied to this market, this transaction, so be it. It's an investor's market. It doesn't have to have anything to do with fundamentals, or it can all be crap. It doesn't matter if someone's willing to pay more for that crap, and it doesn't make it a bad thing. It just makes it a trading market, and a trading market many of you may not be interested in. But I do believe that there's an underlying aspect of the crypto ecosystem that is very fundamentally driven, and that's the larger altcoin market that Dragonchain probably falls more into, where I'm personally making investments, not so much for day trading. There's not even enough liquidity anyways, but more so on average altcoins, but more so because I'm taking a chance on investing into a startup that I otherwise wouldn't have had an opportunity to invest in. I had no opportunity to invest in Uber or Postmates or DoorDash or what have you. Why? Because I'm not a rich dude in Silicon Valley.
Yes.
That's the only reason. Yep. Crypto completely removes that barrier to entry on a global scale for young guys like us, and old guys and girls and everybody else, to finally get access at an early stage to some of these opportunities to invest in startups. That's what I believe that the altcoin market is. Whereas the Bitcoin, Ethereum, more highly liquid leverage trade market, that's just people trying to make money trading, and there's nothing wrong with that.
Right. I agree, by the way. I think 2017, 2018 was less of a bubble and more of universal exposure, right? The fact that here is a market that has never been allowed, right? Has never realized, and that's a lot of money. That's Absolutely. Why, and some of that was cut off, right? So we'll see. Maybe it'll come back. Okay, hopefully. That's everything I have. Do you guys have any final comments? Any questions? Anything about anything coming up, or what to bring up what you're working on next? Or
for me, it's pretty silent right now. I've been working on my automated trading environment for the last, I don't know, I think I started out doing work on that like 3 years ago, but at the moment it's pretty silent. I'm working towards a fund next year, a private fund that's going to launch with a limited amount of investors and a limited amount of money that it's going to be able to get in there for now, for the time being. But I do want to have that track record on paper. So by next year, I'll probably have about 18 months of full track record of all the algorithms. So I'm taking a slightly different direction than what Joe was doing with Stacked, and I think it suits my lifestyle better because it kind of gives me a little bit more freedom and less responsibility. And I also, I know the tech inside out. So for me, that is what I'm working on right now, and just learning about trading every day, I guess.
Great.
Yeah, that's exciting. And yeah, on my end, it's more of the same. We're trying to continue to find ways to make it super simple for average retail investors to gain exposure to this market. And if they want to be aggressive, give them automated tools to be aggressive. If they want to be super conservative, give them ways to earn in a more conservative way, and continue to expand that. We also do have some institutional tools, which are kind of on the back end that we don't talk about, that we're working on too, because a lot of funds may already use their own private algorithms or what have you, and they're interested in kind of using our UI just to make it more user friendly. So, we're just going to continue on that. I try to stay super focused on what I'm working on so I don't get too distracted. So that's why I haven't been tweeting like crazy lately or doing a bunch of stuff. We're just heads down and working, but feedback's important, and we love to hear it. And Joe, just want to thank you for having us on. There goes my automated light timer, which means it's time to go.
Right.
And I appreciate it, man.
No, thanks both of you for coming on. This is a really good show. So we'll be in touch. We'll talk to you again soon, right? And hopefully have you on again sometime.
Yeah, take care. I'm looking forward what's going to happen with Dragon. I've been loving the save the tweet bot so much.
Yes,
it's literally, people say like, okay, you can take a screenshot, but you can fake a screenshot.
You can fake.
But now I can prove on multiple blockchains that you set something. And you then delete it.
That's something else. Yeah, I'll tell you something else. You guys, if you have any thoughts that you want to say, okay, I'm going to put something on chain, and this is a model that's maybe a little abstract, but you say I think Ethereum is going to be X, right? I put it on chain, and I now can you could broadcast on Twitter your hash, and then you can actually reveal it later, right? Something to consider, right, for both of you guys. If you had something that you would want to show, because if you go straight to Eternal, you don't have to do the save the tweet bot. You can actually save stuff, and then just keep the transaction ID and show it to anyone later, right? Anyway,
that's neat.
Yeah. So anyway, all right. Well, thanks a bunch for being on. We'll talk to you guys soon. All right.
Awesome. Thanks, guys.